Good morning. This is Adrian Small with the Lux Sterling Group at TTR
Not too soon.
Sotheby's International
Hi.
Realty. This morning, I have the pleasure of having a conversation with Sebastian Rivera from MVB Mortgage. And to give you a little background, they started off as Potomac Mortgage Group back in 2009 and then merged with MVB Bank back in 2012 and have been doing business as MVB Mortgage ever since. Sebastian is a senior loan officer, and I'm sure he's been there like forever. And they do business in several states. The most important to me, of course, are Maryland, DC, and Virginia. So without further ado, Sebastian, good morning.
Hi, Adrian. Good morning. How are you doing?
I am doing great. I'm sure that your clients and, of course, agents like myself have been hounding you with calls to find out what's happening with the rates. What can you tell us about that?
Volatility. What's happening with rates right now is unprecedented. They're up, they're down, they're all over the place. The rate swings that we usually see over a course of 12 months, we're seeing in a matter of 2 hours. So rates will be 3.5 in the morning. In the afternoon, they'll be 4.5. The next morning, they'll be 3.7. By lunchtime, they'll be 4.1. It's just the volatility we're seeing right now is something like we've never seen. I've done this 16 years. And I have never seen the swings that we're seeing now in such short periods of time.
Well, of course, these are different times. So my next question is going to be a little difficult, maybe, because I'm going to ask you if you have a magic wand. What can you tell us about what you're all thinking about? What's going to happen in the next 6 to 12 months?
Yeah, of course. So it's going to be first getting through this period we are right now. There's two big things driving rates. Well, there's multiple things driving rates up and down, but the two major ones are, number one, mortgage lenders are at capacity. That basically means that the volume that we usually closed has multiplied times 4, times 5. So needless to say, all lenders are working 12, 14-hour days. There are multiple banks out there that won't do any refinances. The ones that do will push you out 5 months ahead. So with so much volume coming in, lenders have increased rates temporarily. So this is why you're seeing rates above 4% again.
Right.
And the second one has to do with the Fed purchasing 50 billion of mortgage bonds every day. And lenders are facing something called mortgage calls with the the margin calls. With margin calls, we have less working capital and it becomes a liquidity issue. So once we transition away from this, give it 6 to 8 weeks, you're going to see rates to start drop back down again. We're going to get into a more normal market. But for the foreseeable next 6 weeks, it's going to be highly volatile. As we move 6 to 12 months out, you're going to see markets stabilize, mortgage rates stabilize, come back down again, and we're going to have a more normal market.
Well, from my perspective, even though these are very interesting and difficult times, I see this not as the same effect as we had in 2008, but something more in line with the possibility of the business picking up once we find a solution to the crises that we're currently in. At least that's from the real estate perspective. Having said that, I also wanted to know, because I know that people that have mortgages or transactions in process, buyers that have contracts out there, there have been some changes in the transactions. Can you tell us a little bit about that?
Yeah, there are a couple actually. There's before closing, all lenders always have to verify that you're still employed. That's a big thing. We usually do this 10 days or 7 days before, depending on the bank, depending on the investor, and that's normal. With so many people being furloughed, out of business, restaurant owners that were purchasing a house and now have to shut the doors, we're required to do verifications, even for federal employees, 3 days prior to closing. So if you're closing on a Wednesday, we have to verify your employment on Monday. Now, in some cases, this has resulted where we call and say, oh, well, the employee is furloughed, or oh, they just got laid off, or oh, we had an hour reduction, they're no longer working full-time, now they have to work part-time. This is a big deal for us. We have to take this into account in the income calculation. And this has resulted in multiple delays on closing and some people right out simply not qualifying anymore.
And does this include also verification of, financial statements, bank financial
Yes.
statements?
Smart question. Yes. With the stock market taking 30, 40% hit, we are required, if you are going to use the money for either reserves or for down payment, we need to verify that the money's still there. So we've requested multiple people to send us updated statements. You would see people with $100,000 as of December 31st with that same account now $60,000. We're also seeing new minimum credit score requirements across the board.
Okay.
Most lenders have increased this on Monday to 660. With very rare exceptions, the maximum debt income ratios have been reduced to 50% LTV. And most importantly, on jumbo loans right now, we were able to do 90% financing. As of last week, 85% financing. We got a memo this morning. Most investors are coming down to 80% financing.
Wow.
Now, this also includes home equity lines of credit. People were able to go up to 90%, no problem. Multiple banks are reducing this to 85 to 80. We've seen bridge loans go down from 75 to 70. So this is going to be a temporary reduction, but it's very real and everything is hitting at once.
So I just have one additional question, and it strays a little bit away from that. It's more of a transactional question since you have to do appraisals. What are some of the changes in that?
Timing. The biggest thing is timing. So appraisals, if it's a purchase transaction and needed a rush, we would get it done in 3-4 days, no problem. Pay a rush fee? Absolutely. I just had an appraisal, which I needed back in 2 weeks. We paid an additional significant amount for a rush appraisal, and we got turned down by 9 different appraisers that were not able to turn around a rush purchase in 14 days. Refinances are 3 weeks right now. Purchases are, say, 18 days to be on the safer side, and appraisers are having to scramble. And I've spoken to a couple of appraisers about trying to reduce the turnarounds, and they just said, Sebastian, we are overwhelmed. We are doing the best we can with the amount of files going through. But until this refi wave doesn't clear the pipelines, which is going to be this month and next month, we're still going to be seeing increased turnaround times on the appraisals.
Yeah, and I also see that, in line with what is really going on in terms of the limitation of visiting properties and things like that might put a damper or might lengthen those times. And I think us as real estate advisors take that also into consideration. Not everybody is available, and not everybody is, if you have a client that's currently living in a property that needs to be appraised, that has a few hiccups that, we have to abide to certain rules about, how we go about doing this, which must make our job and your job a little bit more difficult. That's what happens when we're under this situation.
But we're all in it together, and it's just a matter of patience with it. I've still seen 14-day appraisal contingencies come through. I call both parties, let them know, guys, in this market, it's unrealistic. We're going to do our best as always, but just be understanding if we need a few more days. And I've had a lot of pushback. I've had, even in these times, we need this closed in 3 weeks. It's unacceptable. And even the VA appraisals are taking 21 days.
Yeah. Yeah. That's what's happening out there. I'm glad to see that, you're busy under the circumstances. Our market as real estate has slowed down, which is normal. And there are different percentages depending on whether it's Maryland, DC, or Virginia. But in any event, we will get through this. And I so appreciate you having this conversation with me today. And stay safe. And we will be in touch. And thank you very much.
My pleasure. Have a great day.
You too. Bye-bye.
Bye-bye.